Welcome, everybody, to today's Intelligent Property Investor Masterclass. Well, we're seeing a pretty volatile market at the moment, particularly in the share market, but perhaps not in the property market. The property market is heading in one direction and very strongly in that one direction. So this is the Intelligent Property Investor Masterclass. It's all about property. It's about what's happening economically so that we can understand what's going to happen in a property space so you can make better decisions and ultimately make more money. Now, if you're listening to me on a podcast, either on Spotify or on iTunes, I do really encourage you to go across to my website, iloverealestate.tv, and have a look at my slides because I've got all the charts there for you, and there's lots more videos and blogs and all sorts of things over there. So let's have a look what's going on this week. Are the Kiwis betting too big on property? What's going on across the ditch? I want to talk about wages this week because I've been talking about it for a little while, but we're now starting to see what I've been saying was going to happen is now happening. They're starting to lift a little bit, and then again, that's going to show further support for house prices in 2022. Now, why the seller strike might finally be over in Australia, but property demand is still really strong. So we talked about the Kiwis before. The New Zealand Reserve Bank has come out with some interesting analysis and a few statements this week. So we'll have a bit of a talk about that. And even though he's the one who started everything over there, there's the governor of the Reserve Bank of Australia, Reserve Bank of New Zealand. It's interesting to hear his comments. So let's talk about wages first up. Look, I've been saying for some time that wages have to increase. Wages have been down comparative to everything else, inflation and everything, for a very long time. And as I said, they went on stall while we went through COVID, when we would normally, in a normal market, have had pressure for wage increase. We didn't, because everybody was just happy to have a job, let alone try and get a higher wage. Well, that's now starting to unfold, and we're starting to see that the pressure is now on. Most people seem to think that the worst of it's behind us, and now it's the unions putting pressure on the big guys to actually pay more in wages. So the minimum wage is going up across the board, and all of the union markets are all pushing for higher pricing. So we're going to see more and more of that. Now, this was in the Financial Review, and white-collar salaries have surged 3.4%. So that's something that it's just showing what I've been talking about for some time. We're going to see wage action. Now, what does that mean for house prices? Well, as wages go up, it actually fuels inflation, but it also means that there's more money in the household for things like property, rents, and all the rest of it. However, in the longer term, because it fuels inflation, and it provided the unemployment rate continues to go down, the Reserve Bank of Australia has actually come out and said, when we get those two figures within their target ranges, then we will start to see a lift in interest rates. So we're going to see wages and interest rates do this for a bit, levy up and down, up and down. It's not going to be quick. Wages certainly need to do a hell of a catch up at the moment, but we're going to start to see some of that filter through into the property market. And it could affect the very bottom end of the market, although demand is so high that it's going to be a blip in the ocean, because there are so many people looking for that affordable purchase that I really don't think it's going to have any kind of major impact at all. So this is the wage changes of different sizes. So you can see there throughout the time, wages are lifting, as we can see in the chart there, which is off low levels. So they have been low, and this is right around the world. It's not just here in Australia; it's right around the world that it's happening. So wages are lagging. And they're lagging certainly way behind what's happening in the property space and the property pricing. So this is to be expected. There's going to be a lot more of it. I would expect to see quite a bit of industrial action next year. We might even see a little bit more as we lead into Christmas, because there you're going to see, the pressure's on, and we already started to see the couriers thinking about them, having a bit of a talk with their employers at the moment, and threatening, strikes and whatever else, because they know they can, because everyone wants their Christmas presents. Well, next it's going to be the stevedores in the, at the docks, and it'll just flow on throughout the whole thing. A lot of the construction workers have already had a decent increase because there's such high demand. You just got to pay the higher pricing to get the, to get the people on board. But at the lower end, the big boys are copping the profits at the moment. So there'll probably be a little bit of a lift there at the lower end as well. So you can see here the wage growth expectations. So this is what people expect the wages to do. Households expect them to come up a little bit, but not much. Market economists like myself expect them to come up substantially, and unions do as well. So what the households think really doesn't matter. It's going to be what the union action is prepared to put into place to make it happen. So this is the salary spike that we're seeing, and it's a trend right across the world, where the labour compensation per employed person, and that's the percentage change on the year. So we've already started to see it. Australia is lagging. We're going to see more of it, basically. All right, what does this chart show us? This chart actually shows us the wage growth in comparison to house pricing. This is what I was talking about. Wage growth has been relatively steady as we've gone through, and that goes back right through to September of 2001. And then we've seen what's happened to house prices over and above that, and it's getting the divide between wage increase and house pricing is getting way bigger than it ever has been before. So that's what is going to get corrected, but I think it's going to be the bottom one coming up rather more than the other one coming down at all at the moment anyway. We've got to get to a oversupply before we're really going to start to see house prices, level out or actually drop. There's been a little bit of a talk about house prices dropping. I can't see it for next year at all. It's going to take all of that time for the fundamentals to work their way through the system. We are so undersupplied with where we're at the moment. That's without any migration. So we've got to chew through all of that undersupply. We've got to produce more buildings to take up the demand that's sitting there. And then once they open the borders, there's going to be another influx. So we will have a more moderate surge next year rather than this massive, crazy thing that we've been going through this year. But as soon as they open those borders, particularly Sydney and Melbourne, they are going to get a lot of pressure. And that's why I'm really tipping, Brisbane mainly for the millennials moving, but also Melbourne because it is where it is. It's more affordable than Sydney, and most of the migrants go to Sydney and Melbourne, let's face it. So this just shows you similar type of things. And you can see there how the house price growth has been massively above what we've seen for wage growth. And it's right across the states. It's not just any one in particular. It's right across all of those states. So is the selling spike finally over? Have a look at this. Listings are starting to lift as sellers are enticed by the high prices. I even put one on the market recently, which I don't normally do. However, demand is strong and listings remain low. So meaning that it will take some time before rising supply takes any heat out of the market. And that's what I've been saying. That whole demand supply, that ratio, we are undersupplied. We are undersupplied in new housing, and we are undersupplied in people just ready to sell their property. And remember, I think I told you last week, if you do decide to sell a property, get back into the market. Do not leave your money sitting out of the market for any length of time, because your money will devalue. The property prices will go up and your money's not sitting in there getting that rise. So be very careful of that. And if you're not in the market yet, please, for God's sake, have an appointment with one of my advisors, and they can help you see what you can do to actually get into the market. Even if you're in the worst possible financial situation at the moment, there is always, always a way forward. So I don't want you to be sitting there in despair going, oh my goodness, I'm never going to be able to own a home. Well, you can. It's just a matter of educating yourself so that you know what you can actually do. This is the monthly total for sales listings, and you can see there that there's been a massive trend down generally, but particularly for 2020 and 2021. There's been a little bit of a kick up, as we can see just now in the last month or so, but I don't think it's going to be sustained, because if you look at a chart like this, you can see our volumes are much, much lower than they have been in any year back through to 2016. So, you know, there's still a lot of growth to be had. There's still a lot of supply that's not reaching the market. The big boys pulled out of the market and produced the big developments back in 2017, when APRA killed the economy with their heavy-handedness on financing and being able to borrow, and that has really exacerbated what's actually happening right now. So this is the monthly sales relative to previous years, and you can see there that sales are ticking along quite well, but it's on much less stock. So basically, whatever's on the market is selling straight away, and that's really being shown here on the days on the market. You can see the days on the market now are down at 30 days on the market, compared to back in, say February of 2019, they were up at 80 days on the market. And February of 2020, before COVID started, again, they were up at that, nearly 80 days on the market. So we've halved that, more than halved that. And that really shows the pressure of the market. There's the average views per sale. So everyone that's looked at, you can see there right through COVID and everything else, we were getting very active on the search engines to have a look at property and what's happening, and it's not stopping. You can see the angle of that chart. It is, you're looking at nearly 2,000 views per listing. And that's a really big indicator to back up what I'm saying about the demand and supply, where supply is simply under where we are from a demand perspective, and consequently there's upward pressure on pricing. So this just gives you the same thing, but it talks about the regional areas and the city areas, etc. So when you look at the core logic is it's a research engine basically that looks at properties being sold, etc. So this is their home price index, and you can see there it's up at nearly 20%. So the prices have been going up substantially and will continue to do so, but not in the extremes that we have seen this year. It's going to level out. They're still going to go up, but it's not going to be frantic like we've seen this year, in my opinion. So what's going on over the ditch? What's going on with the Kiwis? Well, the Kiwis have changed their flag, but their property prices are way usurping what we're doing here in Australia. So this is the New Zealand chart, and you can see there's been a jump from a median house price in New Zealand back in 2015 of around about 500,000 to over $1 million now. And the Reserve Bank of New Zealand Governor, he's warning people not to just have all their money in property, not to have all the eggs in the one basket, he said. And it's caused a problem with low interest rates and money printing, and that's the story right around the world. We're printing money at $4 billion a week. Kiwis are printing money. Don't know their figure, but they're printing money massively, and for the size of their economy, it's having huge effect. Where's that money going? It's going into the property market, just like here in Australia. So it's kind of funny that the governor's come out and said, don't put all your eggs in your own one basket. It's not all about property, guys. He caused it with all the printing of money and everything else, and the official rate of interest rate going down to try and fuel the economy. He caused it, and now he's on the back pedal, going, oh well, maybe I overdid it. So that's the New Zealand house price index. You can see there, and again through the roof, up in the 30% nearly. And nationally, when you have a look at the increase, it's at 28.8%. That's the percentage increase that we have seen in the last 12 months in New Zealand. Now, we are not at those levels, nor do I think we will get to those levels this this year, although Sydney's up at like 20% and these sorts of things. But I think New Zealand will still be ahead of us in that regard. But looking at, some places, Wellington's gone up 36%. I can't even pronounce some of those towns. Christchurch, nearly 32%. Hamilton, nearly 32%. You can read them for yourself. That's the kind of craziness that we're seeing in New Zealand right now. And I must note also that their immigration policy has been a lot more loose than Australian. A lot of people use New Zealand to get citizenship there and then come across to Australia. Whether that's caused it or not, I don't think it's been massive through COVID, but it's certainly going to be an indicator moving forward, because a lot of people are going to be migrating away from areas where things haven't been as good as we've had them, down here in the south. So there you can see New Zealand house prices across the board compared to Auckland. It's going to continue. So here's the Governor of the Reserve Bank of New Zealand. And I just got to read this. I think this is so funny. He says, we view New Zealand's house prices as currently above a level that can be viewed as sustainable. The aggregate value of land and housing in New Zealand, including rental properties, is currently around $1.5 trillion. This equates to over half of all household wealth. New Zealanders have one very large egg in their wealth, and I think you pronounce it kete. I don't know what that is, but I assume it means, their wealth basket or something to that effect. So again, same story. You've got residential mortgage rates. The interest rates are down, and that just shows you there what's happened since GFC, and we've seen that gradual decrease in interest rates. Why is it happening? Well, you can see it here in a very clear chart here in Australia. That actually shows you the Reserve Bank of Australia's assets. Why? Because we're printing money. And the Reserve Bank of Australia is buying a lot of that paper in domestic bonds. Look at that big grey. That's domestic bonds that we have printed that our Reserve Bank of Australia has bought in order to get money into circulation. Now, term funding facilities, very similar. A lot of that, that's how much the Reserve Bank has bought there. So same sort of thing. And then it's all the gold reserves and other bits and pieces haven't moved a huge amount compared to what they were. But we're printing money, and that is why ours and New Zealand's house prices are being fueled. You can see there where we sit compared to some other countries, where Japan's at. They're probably one of the highest. But on the left-hand side there, you've got the Euro area, you've got UK, you've got US, massive printing of money there. And then you've got Canada, Australia, New Zealand, and Sweden right up there. And the amount that we have started to print compared to where we were very low beforehand, but by gee, we're making up for it now. And that just shows you what's happening in house pricing as a result. Australia's sitting there fourth in that particular that particular chart. New Zealand's up the top. New Zealand's right up the top. So the proportion that they are printing compared to their size is massive. So, you've got the governor there going, it's slow down, slow down. He caused it. He caused it with all the printing of money. And house prices across the Western nations have actually gone up, and you can see that by this OECD chart there. It's right across the board. It's not just Australia. And I think that's why I'm not so concerned about it, and why we're not going to see a massive crash, is because it's happening everywhere. There's basically been a reset of money, and the value of money has now been reset right around the world. Now, look, if you get into the conspiracy theories of all of this and COVID and whatever else, you follow the money. I'm always about follow the money. The reality of COVID is the more we print money and the more the whole world prints money, particularly the wealthy countries, those that had debt going into this period of time, their debt is being devalued by the amount of money in circulation. So when you look at somewhere like the US that has trillions and trillions and trillions of dollars of debt, those debts are being devalued because of the proliferation of money in their economy, because they're just printing it. But their dollar isn't sinking because everybody's doing it. Yeah, it's interesting, isn't it, when you follow the money and what's actually happening. So the rich are getting way richer, rich countries are getting way richer, and the poor are getting way poorer. And those who owned the loans and the debts on those countries, aka China, Middle East, their debts, their what they consider to be their asset of owning the debt into the US, as an example, is being devalued. So make of that what you will, but there is certainly some interesting side effects of COVID. All right, this is the pandemic drivers over the last couple of decades, and you can see there, the proportion of countries recording an increase in household pricing. It's everywhere. It's all of them. So, Mr. Governor, he's got out there, help me fix my mess. That's basically what his call to arms were in New Zealand at the time. So my thought for the week is dreams don't work unless you do. You've got to get out there and start getting your finances into place. You've got to get market ready. You've got to start buying the right type of properties. You've got to start manufacturing growth. You've got to start building passive income. There's so much to do right now. And we've got such a great market to be doing it in. So that is why I want you, and I urge you very strongly, if you haven't done it so far, please make an appointment with one of my advisors and talk to them about your circumstances. Talk to them about your goals, dreams, aspirations, what you want to achieve. Now, we're not going to sell you a property. That's not what we do. But we will educate you on what you can do and how you can change your circumstances. So jump on there. It's iloverealestate.tv/questions/ talk to one of the advisors. It's an hour consultation for free. It's a breakthrough real estate session with you guys. So take it up, take me up on my offer, and have a great week. And I'll be back again to talk to you next week. Bye for now.